What if the money you're earning from YouTube right now could secretly trigger a surprise bill from the IRS? Imagine this. You're finally making money doing what you love. Views are climbing. Brand deals are rolling in. But one small mistake. With taxes, it could wipe out your hard-earned income or worse, land you in serious trouble. Most creators don't even realize it until it's too late. So today, let's fix that. Because if you're making money on YouTube, or even just starting to, you need to hear what's coming next. Number 1. You are a business, not just a creator. Here's the truth most beginner creators never hear. The IRS doesn't see you as just a content creator. If you're making money, they see you as a business. That's right. You're technically self-employed. That let's say you make $2,000 from AdSense. Even if YouTube sends you a 1099 form, or doesn't, you're still expected to report it. And if you get paid through other platforms like Patreon, brand deals, or affiliate marketing, yup, that counts too. That you're not just uploading videos. You're running a business, and the IRS expects you to treat it that way. Number 2. What is a 1099 and why does it matter? If you earn $600 or more from YouTube AdSense, Google usually sends you a 1099 form. Same with brands and sponsors. That form tells the IRS how much you earned. But here's the catch. You still have to report your income even if you don't. Get a 1099 that let's say a small brand pays you $400 through PayPal. They might not send you any form. But if you don't report that income and the IRS finds out, you could face penalties. Always keep track of everything you earn, no matter how small. Number 3. How self-employment tax works and why it stings. Here's the part that surprises most new creators. As a regular employee, your job usually splits your Social Security and Medicare taxes with you. But when you're self-employed, you pay the full amount. That's called self-employment tax. That it's around 15.3%. So if you make $10,000 on YouTube, expect to pay about $1,530 just for self-employment tax. That's before income tax kicks in. Yeah, ouch. But don't panic. Later in this video, I'll show you how smart creators legally reduce their tax bill. And it's easier than you think. Number 4. You can deduct more than you think. This is where things get exciting. Because while taxes can feel scary, they also come with opportunities. That if you're self-employed, you can deduct business expenses. That means certain things you buy for your channel can reduce your taxable income. For example, bought a camera for your videos? Deductible. Paid for editing software? Deductible. Upgraded your internet so your uploads are faster? Yep, deductible. Even partial rent or electricity might qualify if you use part of your home exclusively for content creation. Just be careful, there are rules. Keep detailed records and only deduct what's truly used for your business. Let's say you made $20,000 last year and spent $5,000 on business expenses. You only pay taxes on $15,000. That can make a huge difference. Number 5. What counts as income for creators? Most beginners think only YouTube AdSense income is taxable. But in reality, almost everything counts. That here's a quick list. AdSense revenue, brand sponsorships, affiliate earnings, Patreon or Ko-Fi donations, merch sales, course sales, or ebooks. Gifts or PR items if you're required to make content with them. Let's say a brand sends you a $300 skincare set in exchange for a review. That's considered compensation. You may need to include the value in your income. Always assume the IRS knows more than you think. Number 6. Set aside your tax money early. Here's a heartbreaking story. A small creator made $8,000 in her first year. She didn't think she owed much, so she spent it all on gear and rent. Then came tax season, and a $1,200 bill. With no money left, she had to borrow from family. And her channel nearly shut down. Don't let that be you. A smart habit? Set aside 25 to 30% of all income into a separate bank account for taxes. That way, you're never caught off guard. Number 7. Quarterly taxes. Yes, you might need to pay them. Most employees pay taxes through paycheck withholdings. But YouTubers? You might need to pay taxes yourself 4 times a year. These are called estimated quarterly taxes. Here's how it works. If you expect to owe $1,000 or more in taxes for the year, the IRS wants you to prepay them every quarter. That means April, June, September, and January. Missing those payments could lead to penalties. If you're unsure, talk to a tax pro or use IRS Form 1040 ES to help estimate. Number 8. Should you get an LLC? One of the most common questions, should I form an LLC? Here's the deal. An LLC, limited liability company, protects your personal assets. So if someone sues your channel, they can't come after your house or car. It also makes your business look more professional. But here's what most beginners don't know. Forming an LLC does not automatically save you money on taxes. You're still taxed like a sole proprietor unless you choose to be taxed as an S corp, which only makes sense once your income grows if you're making consistent income or working with big brands. Forming an LLC could be a smart move. But for beginners, it's not a must right away. Number 9. Don't mix business and personal money. If you're treating YouTube like a business, your money needs to look like it too. Open a separate bank account. Use a separate credit card. Keep track of every dollar that comes in and goes out. Mixing personal and business funds makes tax filing messy. And in an audit, it can get you in trouble that let's say you use your personal card to buy a camera and groceries. Now it's unclear what was a business expense. You might miss deductions, or worse, raise red flags. Clean records protect you and save you time. Number 10. Use simple tools to track everything. Don't wait until tax season to start tracking your income and expenses. Use tools to make it easier. Here are a few beginner-friendly options. QuickBooks Self-Employed Wave, free, Google Sheets, or Excel. If you're organized, keep digital copies of all receipts. Save screenshots of payments. Track what you spend and why. Trust me, future you will thank you when it's tax time. Number 11. Hire a tax pro when things get serious. If your income is growing or you're feeling overwhelmed, there's no shame in hiring help. A good tax preparer or CPA, certified public accountant, who understands creators can save you money with smart deductions, keep you compliant with IRS rules, advise you on LLCs, S-Corp, and more. Think of it like hiring an editor for your videos. Sure, you can do it yourself, but with expert help, the results are smoother and safer. Number 12. What happens if you don't file? Here's what nobody wants to talk about. If you skip filing taxes, ignore income, or forget to pay the IRS, eventually notices, you might get hit with late fees, interest penalties, and in rare cases, legal trouble. Even worse, if you get audited and don't have records, the IRS can guess your income, and you'll owe taxes on their guess. Filing taxes isn't just a formality. It's a shield that protects everything you're building. Number 13. Hidden deductions most creators miss. Let's go deeper. Here are some deductions most creators don't even think about. Travel for vlogs or brand shoots, props, costumes, or makeup for content, subscriptions to editing tools or music libraries, coaching or online courses for YouTube growth. Part of your phone bill, if used for work, as long as it's directly related to your channel and business, and you keep proof, it might be deductible. Number 14. State taxes and local rules. Federal taxes are just one part of the puzzle. Depending on where you live, your state might want a piece too. Some states don't charge income tax. Others do, and they can be strict. For example, California, New York, and Illinois have tough rules for freelancers. Always check your state's tax website or speak to a local tax expert. But don't forget, city taxes and business licenses may also apply. Number 15. When you're just getting started. Let's be real. If you're still building your channel and only made a few $100s this year, taxes might feel scary, but it's actually the best time to learn. Start tracking now. Keep good records. Understand your responsibilities. That way, when your channel grows, you're already prepared. The YouTubers who succeed long-term are the ones who treat their content like a real business, even before the money rolls in. Before we wrap up, let me ask you something. If the IRS asked to see every dollar you made and spent this year, would you be ready? Or would it feel like a panic attack waiting to happen? Drop a comment below. What part of creator taxes confuses you the most? Let's help each other stay smart, safe, and ready for success.